hello, welcome everybody to Digital Futures for Good. This is, I think, our 10th episode. And it was probably around this time last year that Digital Futures for Good became an idea and then became a reality. So it's our conversation series for 2024. And from our point of view at Good Things Foundation, it was about breaking out of the bubble of digital inclusion to make sure that we really surfaced the intersectionality, the relevance to lots of different areas, but also facing into a year where we were expecting a general election. I must admit, we were expecting a general election in the autumn. We thought that we would use Digital Futures for Good to collect policy ideas to be presenting through that anticipated, but ahead of that anticipated election. But obviously it came earlier, but that's perfectly fine. We're going to be writing a report and publishing that at the end of January next year to bring together all of the voices, including from today's amazing conversation. And we'll be publishing that report at the end of January. So we couldn't finish Digital Futures for Good without an episode talking about the link between financial inclusion and digital inclusion. It is so incredibly important, not just because digital exclusion excludes people from financial services, but also because of the huge link and overlap between people who are socially excluded, people on low incomes, and digital inclusion, and therefore they are many of the same people who are excluded from products and services through financial inclusion. I'm not going to give any stats from Lloyds Consumer Index because I think I might then steal Jemma's thunder. But it's obviously incredibly important that we do surface these links. That we also, because we do have a new government who is running at lots and lots of important areas, we are promised to have a digital inclusion action plan, maybe a strategy. We'll have to wait and see next year, but also a financial inclusion strategy as well. So the great news is that the Treasury have already said that digital inclusion is a really important part of that financial inclusion strategy. So we're going to have a conversation around the panel. And then we're going to come to questions from yourself. So please do put questions in as you go along. And I definitely will be coming to you all later within the hour. So I'm just going to quickly go around and ask you to introduce yourselves. And then we'll kick off for real. So Jemma, why don't I start with you? Please introduce yourself.
Sure. Hello, and welcome to everyone for joining today. Thank you. So I'm Head of Customer Inclusion at Lloyds Banking Group, leading the work about how to grow digital and financial participation across our customers in communities and working with brilliant people like on this session here today to think about how we do that for the UK at large.
Brilliant. Sarah, do you want to introduce yourself?
Yeah, thank you, Helen. Good morning, everybody. It's great to be here. So I come with a number of different hats to this conversation today. I'm a non-executive director at BT, who are very engaged in digital inclusion activity. I'm also the chair of the Money and Pensions Service, where we work a lot on the financial inclusion, which, as Helen rightly said, is increasingly going to be also including digital inclusion. And I work a lot in disability inclusion as well. So yeah, lots of hats to wear today. Looking forward to it.
Fantastic. And obviously you have all those hats because you're such an expert, Sarah.
Jack of all trades.
Martin, introduce yourself.
So I work at, I'm going to wear two hats for this one, Sarah, if that's okay. I'm a professor of practice in financial inclusion and consumer policy at CHASM, which stands for the Centre on Household and Assets Savings Management, bit of a mouthful, at Birmingham University. And I'm also an advisor at Fair by Design, which exists to eliminate the poverty premium, the extra costs of poorer people pay for essential services. And I used to be director of that.
Fantastic. And Piers, have you just got the one hat?
Yes. Sadly, just the one hat for now. I'm Piers Claughton. I'm the senior advisor in the public affairs team at Virgin Money. I lead on our personal banking work and our ESG related work, which includes a commitment to try and tackle the poverty premium. I think that's everything from me.
Fantastic. Thanks, Piers. So, Jemma, I mentioned the Lloyds Consumer Digital Index, because that is absolutely a font of all, well, not all, obviously a lot of evidence around digital inclusion, but clearly because you're a banking group that you bring knowledge about the financial access to financial services and financial products as well. So Jemma, do you want to just talk a little bit about that data and what it shows us about the links between digital and financial inclusion? You're on mute, Jemma.
Fell at the first hurdle there, didn't I? So exactly as you say, so going back to how I described my role, the cornerstone of that absolutely has to be how we is using data and using customer understanding and spending time with people to shape how we make our decisions. And the most recent Consumer Digital Index, which was published in November, really helps to not just build on our understanding of how digitally capable and confident the UK is or isn't, but also evidences some of the clear positive financial outcomes that digital enablement can bring, and therefore it also helps articulate the numbers of people and the challenges that people have in reaching and achieving that digital dividend. So I suppose in terms of to kind of set the scene on it, so 14.2 million people in the UK adults have the highest digital capability. And as a result, we've got evidence to show they're saving time, they're saving money, they have greater opportunities when it comes to accessing and engaging with jobs and the employment market more broadly. Greater digital skills and confidence absolutely is leading to greater financial management day to day and for the future, and also really crucially leads to less stress when it comes to finances. So people are telling us that actually the ability to access and engage with finances anywhere, anytime, any space is helping them worry less, whatever their financial situation is. We can see that they're saving more, and putting this into numbers, they're saving over £1,000 a year more than those who have low digital capability, and they're also more likely to be planning for their future. So we can see that they're investing, they're making, whether it's jam jar accounts from a savings perspective, or whether it's more broader kind of investing in stocks and shares, they are engaging with financial services, products, experiences significantly more. So clearly the reason why I'm talking about them is to demonstrate the difference and that broader kind of digital poverty premium. So actually there are 16.8 million people at the other end of that spectrum who haven't yet realised those benefits. And I suppose what we've tried to do in the report is really explore some of those barriers and explored some of the considerations for, you know, us all as we work together to think about how we can support people with being more financially and digitally included. I suppose when I think about those 16.8 million people, we know that roughly half of those are also likely to be financially excluded, and there's much bigger factors at play here. But I think what we are consistently seeing about digital inclusion as a topic, that actually it is emblematic of broader social inclusion, economic inclusion more broadly. And I know we've talked a bit about that concept of being double disadvantaged. So actually lack of the ability, the access, the capability, the confidence of engaging and participating with digital does compound other broader circumstances that people have. And I think that's, delving into that in a lot more detail, as I'm sure we'll do in this conversation, I think is just so crucial for, as you said at the start of this call, Helen, we can't think about digital inclusion as an entirely separate activity. There's broader systemic features that we need to tackle. And it's important that organisations think about how they can do this first and foremost. We think about it on three horizons, almost that kind of internally. How are we supporting our colleagues and helping our organisation to think about and consider these factors? What are we then doing for our customers and communities? And then again, how do we work together through conversations like this to make sure that we're really embedding that knowledge at a UK level?
Yeah, brilliant. Thanks so much, Jemma. And Sara, coming to you, that sometimes I worry when, as a society, it's all about personal responsibility, that actually people are left behind because they haven't got their act together. They haven't managed to navigate the world in a way that means that they're financially or digitally included. So just with with any of your hats or all of your hats on, Sarah, just what do you think the role of business is? So what's the role of like responsible business for digital and financial inclusion?
And I just realised I've got another hat I'm going to put on briefly, and then I'll take it off again. Because with Piers here, I was on the board of Virgin Money until they joined up with Nationwide. And the reason I was on the board of Virgin Money is exactly what Piers has described, which is that I was passionate about trying to address the poverty premium. Virgin Money was a bank that was doing that. So having spent 9 years on Jemma's board at Lloyds, I spent a couple of years over there, but obviously dropped away in the autumn. So I think one of the probably the biggest, the most important hat I bring to today, I think probably, is actually the MAPS hat. Because certainly at MAPS, we spend a lot of time thinking about financial inclusion as well as digital. And it's really good that the financial inclusion strategy, which is being prepared, as Helen knows very well, because she sits on the financial inclusion committee, as do Lloyds, is for the first time putting digital education, digital inclusion as a strand within financial inclusion. I think that's hugely important. At a very practical level, it's really hard to be financially included if you're not digitally included. I think the point about responsible business is interesting. I chair the responsible business committee at BT, and we were actually only meeting on Tuesday this week, actually talking about digital inclusion and the role that we could play. And I think we, as an organisation, I think every business can do a lot for its own customers and its own colleagues. So I think, as Gemma's rightly described, that the Lloyds focus very much on both of those two cohorts, customers and colleagues. But I also think one of the things that we need to do much better is join up between businesses, because what's very, very clear is, if you've got 8.5 million people digitally excluded or with low or no digital skills, and about the same in financial inclusion, these are not challenges that any individual business can meet on its own. It's just not physically possible for us to do that. And therefore, what we really need, I think, is to coordinate much better. And I'm very conscious that coordination needs a coordinator. It needs a place to lead this from. And I do think, Helen, that the work of the Financial Inclusion Committee and its focus on digital inclusion within that should have something to say to DSIT about the role of government in providing that coordination. Where I've seen government work really well is when they do a good job of painting the lines on the playing field so that the rest of us know which game we're playing and what the rules are. And I think we work a lot in financial education, as an example, at the Money Pension Service. And what we try to do with the banking sector is help them by painting some lines on the pitch. They want to play the financial inclusion game, and that's really good. Financial education comes from banks, is very positive. But actually, they need to be sure that they're not all approaching the same teacher or the same bit of geography or the same age range. And so somebody to paint the lines on the pitch is really helpful so people know where to play. And I would really encourage not only businesses to come to this with a collective mindset. It's not about what you can do yourself. It's what you can do in combination with other people, but also encourage the government to say somebody needs to put the lines on the pitch and tell us the rules of the game so we don't all end up doing the same stuff. So I'm really optimistic that we've got a chance of doing that in the next 3 to 4 years in a way that we haven't probably had in the last decade. So I think businesses just need to gear themselves up to say it's a team game. We're not going to solve this problem individually. We've got to play as a team and come to that party, and then hopefully somebody will tell us the rules and we can get on with working together.
I love that, and I love the metaphor. I might come back and challenge you on how well we'll be able to play the game together.
Yeah.
But Martin, obviously Sarah's talked there about businesses, but clearly the people I think all of us who are in this episode today really care about is those people who are facing the most difficult financial circumstances, because as Jemma says, there's 14.2 million people who are digitally engaged and able to access and have the curiosity, the skills, the literacy to be able to navigate the world that is expected of them, if you like. So just, Martin, talk about those additional impacts of digital exclusion for those people in the most difficult financial circumstances.
Sure. Excuse me. First of all, I just wanted to say how pleased I was to be invited to this. I'm not a digital inclusion expert, but why I was so pleased is I've been working in essential services, especially financial services inclusion, for many years, and when you think about it, everyday access to the internet is like a passport now to essential services. You cannot gain and work within the system, within financial services, without this. And even if you're online or offline, we are all still part of this ecosystem, which is a digital society. And we need to take that seriously. Now, I was thinking about the similarities actually between digital exclusion and financial exclusion. And I think there's a few key things here. One is around the fact that products and services and policy, including regulatory government and business policy, has been based around the average consumer, the average person, the one who always has a steady income, paid the same time every month, never falls ill, has a life shock because can't afford something, and always has plenty of time to engage in markets. And this real belief that competition solves everything, don't you know? Empower consumers drive the market. Absolutely not for some people, especially those most disadvantaged and on the lowest incomes. A huge disconnect between people who make decisions, both in product design and policy design, and people with lived experience of different vulnerabilities, especially low income, and a huge lack of ownership of these issues between government, regulator, and businesses. So I really echo what Sarah was saying there about the collaboration aspect. And I'm super excited too about the Financial Inclusion Committee. And I think that there's some of the interconnections here, which is as a as a society, we've said, look to the market for all of your needs, financial needs. So saving for a rainy day, saving for your retirement, getting insurance and credit for income shocks, and finding a payment method doesn't cost more because you're not online. But, and importantly, for each one of those, we need to engage digitally to get the best of them. However, what if you're a good consumer, a good citizen, go to the market and the market says, don't want you. In financial services, you're too high a risk, you're too costly to serve. Or in digital, and you're more expert than this than me, Helen, in the digital world, you're not profitable enough to supply or to engage with. You're charged more or excluded. And that's why we have a poverty premium here, with many people on those incomes being charged more or excluded in financial services, just so connected. And we're in a situation where income poverty is driving digital exclusion, and then digital exclusion is driving risk of being in poverty. It's absolutely bizarre, but it's the interconnected nature which you've got to get our heads around right now. And I'm just going to leave with one piece that I took from your brilliant piece of research which you launched on Tuesday, I think it was. And it was households with low income spent about £478 more on mobile and broadband than those on higher incomes. And that's just one essential service poverty premium. Thank you.
Yeah. Thanks for that, Martin. The a stat that I find staggering, actually. I was going to say I like it. I don't like it. I just find it staggering. It just sticks in my brain. Is that 33% of people who are offline find it difficult to engage with the NHS, right? So actually, I'm sure we will talk about digital and analog channels in this conversation. But if you think about the NHS, we would probably all say it's got lots of analog channels. You know, you can go to your GP practice, you can phone them up, you can go to A&E, you can go to the walk-in centre. But actually, that stat just tells me that we live in a digital society. So like we're playing catch up, aren't we, in including people into a digital society that is already existing. And I think everything that you've said already is about how important that understanding the interlock between digital and financial inclusion is, but also recognizing that we're not planning for the future. We're playing catch up to help people today. Piers, I love the partnership we have with you at Virgin Money. And you've been doing some, really important things, I think, both in financial inclusion and digital inclusion, sort of separately, but bringing it together through a bank.
Yeah, look, I mean, speaking forth, you can imagine that I think like everyone on the call is chomping at the bit to kind of engage with some of the things that have already been raised, and there are so many kind of really strong points that have been raised around it. But I'll give you a little bit of background around what Virgin Money do, just for anyone who doesn't know about Virgin Money. We're sort of the creation of a bank that is made up of heritage brands, Clydesdale, Yorkshire, and the Virgin Money Bank. So our sort of presence is very much the north of England and Scotland. I think we strongly believe that there's a link between digital exclusion and the poverty premium, and particularly in terms of that how digital exclusion can contribute to that. And research that we did about a year ago now with the Centre for Social Justice identified that on average, people who are digitally excluded can pay 25% more for goods and services than those that have the ability to shop around online. So this is where working with Good Things Foundation has been really helpful in that we're really pleased that we're the first bank to have set up data banks in all our stores and also in the banking hubs that we provide. And what this has done is it's not only about being able to give free data to anyone in the community, not just customers who need it, but it's also about having that opportunity to engage with some of those customers. And I think I've read about 300 or 350 case studies from colleagues who have engaged with people on the front line who have come in about data, but then they hear a bit more of the backstory. So they can be as simple as, they've moved to this country and they don't have data to stay in touch with their families. So there's that sort of strong social aspect. But there are also the ones of people who are homeless, who are looking for accommodation, but have run out of data so they can't look online, or the person who has really excited because they've got a job interview, but their first job interview is over Skype and they don't have data. So all of these barriers are creating a situation. It's also a great in for people who say, as sort of Martin's pointed out, people who say, well, I can't afford broadband at home. And then there's an opportunity to talk to them more about their financial position and understand, if there's more that we can do to help and support them, particularly if they're customers. And, that includes things like, getting them online and then showing them how to use the benefits calculator that we've embedded by Turn to Us, which has been hugely successful in helping lots of people identify benefits that they previously were unaware of. I think also, we are conscious that data is one side, but there's a skills and access issue. And, we've just done some research that really shows that that fraud is a big challenge at the moment for everyone. And again, it crosses over the kind of the digital and financial skills. We're seeing people who believe they've got high digital skills, but who are getting caught out, and people who have high financial skills, but maybe low digital skills getting caught out in a different way. And I think it's a really interesting challenge, and one that makes it very relevant to everyone, because fraud is such a present thing in all our lives. I should also mention that on the skills side, we've done a lot of work with with our foundation, the Virgin Money Foundation. They've contributed 1.6 million to community groups to help provide digital skills training in Scotland, particularly Glasgow, and the northeast of England. And again, that's sort of, we appreciate that there are lots of levels that we need to be engaging at in order to provide support. But going back to what's already been said, I think the Financial Inclusion Committee and the wider government commitments so far around a national digital inclusion strategy, a national financial inclusion strategy, are hugely exciting. And touching on Sarah's point, I think it's really important for both of these that we have government at the centre who can coordinate, corral, and kind of bring the groups together that need to be brought together and sort of drive this change forward. So I'll leave it there.
Yeah, absolutely. And I think just building on that last point, that I also think it's so often we talk about wanting political leadership, but I think we also want courage. That I think with a mission-led government approach, that you obviously need your strategies, and I'm not sure if your strategies paint the lines on the playground or not, Sarah, but that you need your strategies, but you also need politicians who are courageous enough to say, I want to make something happen, and I want to collaborate in order for that to be the best possible thing. And the reason why I say courage is because, and I think I'm going to blame all of us in this virtual room, that too often we've not been part of a collaborative conversation, and therefore we have a campaigning voice, and often we might have a negative voice or a critical voice, and then that means that people aren't brave, political leaders aren't brave to come forward to ask questions and to say there will be a long list and we have to choose a few. Sarah, you're coming off mute. Please do join in.
No, I was sorry, just picking up on there's going to be a long list and we need to pick just a few. I mean, that's been in the last 6 months or so since we knew we were going to have a new government. That's probably been one of my regularly repeated mantras. I think it's such a big area and it's easy for people to get lost because there are so many things that we'd like to fix and that are stored up, as it were. On the other hand, I think there are a very high level of agreement around 2 or 3 things that would undoubtedly make a difference. And my encouragement to the Treasury that I deal with, and the government more widely, is just, can we at least get on with the stuff that we agree on now? Even if we spend another 12 months talking about what else is in the ecosystem we might also want to change, that's not going to change the 2 or 3 big things. And if we don't start now, before we know it, 5 years isn't as long as you think, and we'll be too late to get started. So yeah, I think for me, trying to get some stuff moving quickly is a really high priority because we do agree on so much.
Yeah, I might come back and ask you what they are, but Martin.
Happy.
Yeah, I thought you would be, but let's bring Martin. He's chomping at the bit here.
Yeah. I disagree to a little bit there, Helen. Controversial, because many of us are pulled together, including Good Things Foundation, to be calling for a collaborative approach for years. And the issue has been many consumer advocates going to the regulator, and the regulator saying this is a social policy issue, go to the government department saying, actually, you need more data, go back to the regulator, and can all be in the same room at the same time. And businesses just keeping their heads down. And I can understand why businesses keep their head down, because we've chosen to have markets deliver essential services. And if we do that, we have to recognize that businesses are profit making. And if one business goes against the grain and uses that word that nobody really likes, cross-subsidizes between richer consumers, more desirable consumers to less desirable, they will lose market share and do worse. So we need a sector-wide approach to these systemic issues. And I know Fair by Design, CHASM, and Good Things Foundation, we campaigned together for this financial inclusion strategy, and we also campaigned for a new must-have regard for the regulator. And that is precisely because we recognise businesses can't do it on their own, and it's this collaborative approach. So that's what I'd like us to leave thinking about as well.
Yeah, and I think, thank you for that, because I think we do. I think everyone on this panel, we all do collaborate. We all do talk to each other. I think, though, perhaps the lines in the playground might become battle lines if the 2 or 3 things are not the 2 or 3 things that we want, right? So that, I mean, I say to government and anyone else who will listen around digital inclusion, that I would rather you do one thing and do it really, really, really well, and that will have a step change, rather than do lots of things, try to boil the ocean and don't really make any difference. And so actually, and if that one thing isn't the one thing that I would choose, I would still rather that they did one thing, right? Because putting effort and investment behind something that's going to make a difference, and we're talking here about people whose lives are very, very complicated and difficult, if that one thing can make their lives better and move us forward, then it's going to be a right thing. There isn't one right thing, there is a few right things. Sarah, so what's on your list? And then Jemma, Piers, by all means, are happy to bring you in. What are your top three then?
Well, in financial inclusion, I think that I have two personally, which I think are shared very widely from what I've talked about across the sector. One of which is rainy day savings resilience. There is no question that we have way too little resilience, way too many people who don't have any money in savings at all. And many of whom are auto enrolled in pensions, by the way, which is quite interesting, but don't on a liquid sense have anything at disposal. So every time the microwave breaks or the car needs a new tyre, I haven't got any money and therefore I drop into debt. And that's the other half of it for me, is affordable credit, which is properly regulated, provided at scale by organisations that are regulated in the UK by the regulator, and therefore will play the game by the rules, because the regulator knows the rules on the pitch. And as a bank, you definitely don't want to be outside of the FCA rules on anything. So so I'm saying if we could get something that would build savings resilience, and at the same time make sure that if people do fall into debt, their credit is provided at an affordable rate by people that we can all trust, then actually those two things would make a massive difference.
And do both of those things need, as Martin was saying, collaboration across the market, so that this isn't about getting market opportunity or disadvantage, and then also about the regulator and about that government leadership? Yes, nod. I think Jemma is nodding. Did you want to come in, Jemma?
Yeah, I think kind of building on Martin's point, right? It's easier if the regulator provides the clarity on what is acceptable from a broader risk perspective. And I think it does just help accelerate, the voices of the financial and digital inclusion advocates in organisations when there's the mechanism to make it happen. And I think also thinking beyond large financial services, how crucial CDFIs, credit unions are, and thinking about the financial ecosystem in its whole is just so important. But again, how do we acknowledge that, in the back end, certainly just the huge potential to use technology in a more compelling way to simplify how it all joins up in the back end, so that we can all spend time on the front end supporting customers with engaging with, however the propositions evolve based on that collaboration. But I think you're spot on, Martin. The regulator and that broader market conversation just facilitates it at pace.
Yeah, I think just focusing on the front end, I totally agree, Jemma, with the back end. But my mobile banking app, I can pay someone easily. I can move things into pots. I can set a budget for the month. I can move money into savings and out of savings. I can even send money overseas. I can do all of that right now within a few moments. And even if I want to change something, I just upload a little video and then they'll ring me or they'll make that permission. So actually managing your money in a way, I probably manage my money, and I'm an intelligent professional person, so much better now because the technology helps me to do that. So actually this is not, and I think this is a really important thing about the digital world that we live in, it's a better world. So actually the opportunities for enabling people to be financially included, and I'm going to dare to say the words income maximization, to have more money, to not be in poverty premium, actually technology provides a real opportunity. So it's not just about paying more for goods and services that you do when you're in poverty, but actually the tools are there to help you to manage your money in a way that actually you didn't have before. I mean, apart from jam jars, etc. But presumably you only saved in jam jars if somebody told you about that as a technique, right? That it's not something you necessarily would naturally do.
Absolutely. And I think, Helen, just building on that point, there's so many fantastic fintechs and organisations that we're partnering with. So whether it's Benefits Finder or organisations like Lightning Reach that quite literally can help you put more money in your pocket because you can access the benefits and the grants that actually otherwise, the level of paperwork and navigation of local government systems would just absolutely prevent you from doing that. So I think you're spot on. And I think to have collaboration across the sector around what are those almost kind of cross-organisational propositions and background data pipelines and all of that good stuff that can enable more of those features and developments, I think would make a tremendous difference.
Yeah, definitely. Martin, just coming in here, and Piers, by all means, comment as well. So Sarah's two, the rainy day savings and affordable credit. Would you die in a ditch if they were the two that we all stood behind with our spears? I think I'm trying to say.
Oh, as somebody who's been working in this field for 2 decades, it's just so difficult to choose. I'm going to be geeky. I'm going to be a bit geeky, but bear with me because I'm an ex-regulator. And I think the big thing for me has thinking about, we talk about income maximization. We can put money into people's pockets owned by only two ways, either increasing their incomes or reducing their costs. And I think there's a huge opportunity here to look at reducing their costs and also in a way which is treasury friendly, so that isn't necessarily going to cost more. I do think income maximization is really important, and all power to the elbow to charities lobbying on that. But thinking about the financial inclusion aspect of it, usually you're charged more or excluded because of the two things I mentioned before: increased risk, too costly to serve. And one of the biggest things, one of the sort of unloved child within the financial inclusion family has been insurance and resilience.
Yeah.
And we do know that one of the biggest reasons people get into problem debt is the fact of a life shock, and not having that. But and also with credit is also calculated on risk base too. Insurance is calculated on risks. And the more technologies out there, the more industry is weighing up how much each individual is as a risk, and they're chasing the healthy and the wealthy. And what we need to do is really understand, where's the market going? Are there ways that we can get the market to be fairer? Or if not, it's really plainly in sight, we need social policy to intervene with some type of cross subsidization method. So, and now that the FCA has a must-have regard to financial inclusion, is sitting at the table at the Financial Inclusion Committee, I believe the FCA should be now lifting up the bonnet on what is driving different risk factors, different pricing for people on low incomes, both in credit, but also importantly in insurance.
Yeah. I mean, that would definitely mean that everyone needs to play the same game then, Sarah, right? Because if you're going to cross-subsidize in your insurance, that means my insurance is going up because somebody
Absolutely.
else down, right?
No, that's exactly right. And actually, I think there's a couple of really good examples of where regulation does paint better lines on the field. One of which is basic bank account, which has been, I think, now held by 7 million people, has been a huge success, I think, in providing some way for people to move money around without the risk of them falling into debt and without the risk of them being charged excessively when they do the wrong thing. So, that would not have happened had it not been a Treasury designated product. But in another area, I also worked in the water sector for a long time, and there the regulator plays a very key part in putting rules, because you have 20 water companies across the country. They all have the same sort of rules around how they have to price and do social tariffs and stuff. So there are good examples of where regulation doesn't stop competition happening, but it steps in to protect the people who would, in a solely competitive environment, to Martin's point, would just not get any attention at all because nobody would go after them. And you don't want to create a world in which the only people who go after the people who are not easy to serve commercially end up then being like an albatross around their neck, so they end up being less competitive, less successful, and actually then everybody gets dragged down with them. So that level playing field is a massively important role, I think, for regulators to play, and then you can release the innovation that comes with commercial activity, but whilst protecting people who otherwise would get left out, as you say, left behind.
Yeah, and I guess in the broadband sector, social tariffs are a similar thing. I'd quite like to talk about, what can we do? I mean, obviously, Sarah, you've come up with your two big actions. Piers, one thing I love about what you're doing at Virgin Money is that that you are working on digital inclusion and financial inclusion separately, and I know that kind of defies the whole point of what we're talking about this morning, but actually you've said that all Virgin Money stores can be data banks, so that means they can provide free mobile connectivity through free SIMs as we do work with lots of community organisations and charities and libraries across the UK. So you're going to do that, and you're going to do that for digital inclusion. So if somebody comes, they're signposted from the job centre, for example, and they come in and they say, I hear you can help me because I can't afford connectivity. You'll help them. You won't talk to them about products and services unless they ask you. That you will just help them with digital inclusion. And then similarly, as you were saying, if a customer says, I'm here in the branch today because I can't afford connectivity, you can say, well, actually, we have some free SIMs here that we can give you free connectivity for 6 to 12 months. And by all means, let us help you to use that with your Virgin Money account. So the reason I say those separately is because they're separate, but because it's happening in your stores, they've come together.
Yeah.
And then I think that is also changing the way that you, but really importantly, your frontline staff are also thinking about how digital and financial inclusion work together. So I just wondered if you want to say a bit more about how it's like impacting on you as a business. I mean, obviously in a positive way.
I mean, I think there's a greater awareness across the business of it, and I have to say it's had a hugely positive impact in terms of, when we share information about the work we do with Good Things Foundation on the intranet, we share with colleagues in other forms. It's always something that they're incredibly enthusiastic about, because I think for them it's a tangible difference that they're making in a way that sometimes it's just not that easy. I think, though, increasingly, I think it has, without any real evidence grounds, it feels like it has helped to, along with other external factors going on, I think it has helped us to focus more as well on, particularly on how we're serving vulnerable customers, what information is available online, what it looks like, whether it works for the people, for everyone who uses it. And we've got a financial inclusion panel made up of colleagues who have different vulnerabilities, who will look and test various different areas, products and services. And I think that has helped. It's helped us review and change online journeys that we have for products and services. Even to the point that something relatively simple like embedding the Turn to Us calculator, that was tested through that financial inclusion panel. And that has been hugely successful. I think we've had 71,000 people use it. We've identified almost £5 million in benefits. So that's people who otherwise wouldn't have got that. I think, going back to a couple of the points that have been touched on already, I think there's a really strong piece around ensuring that the industry work together to ensure that everyone's journey is a positive one. So there will be obviously cases where we won't be able to provide credit to people, but I think it's really important that journey results in them getting the help and support they need, rather than providing friction where they go to they're directed or signposted to somewhere else, and then their journey ends and they end up having to look for an alternative that may put them in greater debt, in greater financial difficulty in the medium to long term. So I think there's some really, and I would like to think that some of this stuff might be the stuff that the Financial Inclusion Committee can kind of bring industry together and help drive. And it's already happening. I'm aware that the industry are talking about these things, and we're talking as an individual bank about them. But I think there's that opportunity to really collaborate. I think there's a question, and this is particularly around the poverty premium. We've been working with the likes of BT, Virgin Media, Octopus Energy, talking to them about the poverty premium issue. And And obviously the poverty premium is quite a significant or quite an important aspect of financial inclusion. Tackling that is really important. It's not, I don't have an answer because I appreciate it adds complication, but the financial inclusion committee is largely, you know, for financial representatives, yourself, Helen, and a lot of really good experts from the third sector. But I'm just wondering, you know, if you think about some of the premiums around things like energy, for example, you know, where do we think the engagement around, you know, how we can ensure that they are not putting unnecessary premiums on individuals, whether that's something that should be discussed within that wider conversation or whether it's something for a separate. And it's just a bit of a challenge that I've been percolating on since the announcement last week.
Yeah, thank you for that. Just before I come to Jemma, and I'll come to Martin too, is that please do put any questions you have in the chat panel. We are running out of time slightly to get to the questions, but by all means, if you have any questions, please do share those. Very good. So Jemma, Martin, I'm going to come to both of you, but also, I mean, obviously Martin is also a member of the Financial Inclusion Committee at the Treasury, so that's great. But also I'm interested in what you think the barriers are, what's stopping that collaboration that clearly all of us are saying needs to happen. So what the barriers are, but by all means, Jemma, say what you're going to say, and then if
Well, I think I can kind of answer a bit of that question, and I'll caveat what I'm about to say by saying it's by no means perfect, and it's by no means, you know, a kind of blueprint for how things could and should be done. But I think the work that we've done over the last kind of 9 to 12 months in our Liverpool inclusion pilot has tried to tackle exactly that. So two things I'd say, Piers, exactly to your point. I think there's a bit of recognition that, and we talked about this a lot at our Consumer Digital Index launch, but if you think about financial and also digital inclusion, like I said at the start, you are thinking about inclusion more holistically. And I suppose by definition, what that means is, you know, we're talking about inclusion to services. We're thinking about inclusive digital services more broadly, and we all have shared service users. So I think that's why we've made a real effort over the last kind of 6 to 12 months to think in exactly that way. How do we work with telecoms? How do we work with utilities? If we're all saying that we think that digital access and engagement is, you know, part of the fourth utility, it's now necessary for the way that we engage in society and the economy more broadly. Yeah, how do we recognise that actually often the people that are excluded in the financial sector are also excluded from engaging digitally and also from energy more broadly? So I suppose what we've tried to do in Liverpool is a bit like you were saying earlier, Helen, is be courageous and kind of just go out on a limb. So working with the combined authorities in Liverpool, we identified a group of citizens who are of working age, not currently in work, who have, you know, articulated that lack of digital engagement is one of the barriers that they've got to being able to do what they want to do with their broader lives, to get a job, to engage with things easier, better, and to not pay more money to do so. So I suppose working with a whole range of different organisations, Assurant, a tech player, Vodafone, FRC, you know, and now a whole range of social housing organisations and beyond, we are rallying around a common goal and a common cohort and working out, frankly, who does what best and how do we work together to test it. And like I said, by no means perfect. There's been lots learned along the way, but I think there's a brilliant opportunity to do exactly that on a national scale. How do we, exactly as everyone said, pick 1, 2, or 3 clear goals, work out who's best to, you know, use their customer channels, their, you know, the scale, the remit, the impact of their business, or lean on and work with the absolutely brilliant community organisations and sector that are delivering fantastic stuff on the ground, and figure out how we can work together, and importantly, measure it, learn from it, share what hasn't worked as well as what has. So yeah, happy to if anyone's interested in finding out a bit more about that. As I say, it's definitely not perfect. There's definitely room for more people to get involved and to think about what 2025 brings.
Fantastic. Martin, do come in quickly. And I think there's a question from Marla, who is from the community. So by all means, come in, Martin, while I find Marla's question.
Sure. So very quickly to Piers's point about collaboration and how the poverty premium goes across different sectors. Absolutely. I'm just thinking about the different task force and strategies out at the moment. You've got the Child Poverty Task Force, Homelessness Task Force, Digital Inclusion Strategy maybe on the or task group maybe on the cards, Financial Inclusion Strategy, Get Britain Working White Paper, Digital Centre for Government, one online. For me, it's about cross-government working, and that's why I know I and other people are having really as many conversations as possible with the Child Poverty Unit, for example, because they've got 4 themes for reducing poverty, and one of them is reducing costs, and the other is financial resilience. We have to talk across all those things. The other barrier I was going to mention is I'm quite worried about how far we bring lived experience into the solutions development process, because I'm worried that it's going to be too many people like me, rather than actually bringing in a co-design of people living and breathing with the problems, who have the best ideas for solutions in all of these strategies. So I'm going to be banging that drum quite a lot.
Fantastic. And actually, the question is a little bit about that. So Sarah, do come in.
Thanks, Helen. I was just going to say, although I think on financial inclusion there are some relatively simple answers, I think on digital inclusion, actually, it's much more about working together. The thing that strikes me about all those government things that Martin's just described is they all require digital. None of them are delivering digital. So the government, in all its guises, is wanting to do things with people in the society who expects to have digital skills to be able to do those things. But nowhere is it turning around and saying, actually, we're going to help delivery of digital skills in this way. And that's, I think, the difference because I think in digital, I think the government should be doing more of that. But if it's not going to, it needs to acknowledge that all of its systems and its proposals about services are all dependent on digital. So it has to make it possible for the rest of us to contribute to solving that problem, because they're a buyer, but they're not willing to be a provider, if you see what I mean. That's one of the things I think we just need to reflect on.
I think that is so good. And also, I think very much why I'm delighted, and I know you all are and others are, that Good Things Foundation is on the Financial Inclusion Committee at the Treasury, because that's, maybe for the first time they're actually putting that recognition that without digital inclusion, you could have the best products and services, but actually you won't be reaching to the people that you need. I just want to very quickly touch on the question from Marla. So Marla's a great community organisation. She runs Skills Enterprise in Hackney, and she is talking about the impact on marginalised communities, particularly people in deep poverty. And I think, Martin, this kind of comes back to you. You're talking about people with lived experience. But she says, how can organisations like Skills Enterprise best position themselves to address these evolving needs to help our users? So I think that both, it's wonderful that Marla is here and being part of this conversation, but also is, I think, offering to help. So I'm sure if any of you would like to visit Marla in Hackney, she would love you to go and have a longer conversation. But does anybody have a quick answer for Marla?
I would just volunteer from MAP's point of view, from Money and Pensions point of view, that we obviously do have regional managers on the ground who spend a lot of time working with local communities to try and understand how we get through our money guiders proposition help to the people like Marla who themselves can help people better. So I think trying to find a way, maybe Marla could drop her email or contact details to you, Helen, and I could try and connect her with some of our regional people. That might be helpful.
We'll connect Marla to you and to MAPS. Martin?
Yeah.
I think there's something inherently about people like us who are at the table really need to champion this. I will continue to champion this. And it's around not necessarily just about testimony here and there from people with lived experiences, about how do we co-design. Check out the Fair by Design website. We've created toolkits with Design Council, one for firms creating essential services on inclusive design and bringing in lived experience. That is now signposted with the FCA guidance to firms on consumer vulnerability. And we've got one for regulators and social policy makers too. It's not rocket science. But we need to ensure that people make space and put resource into that co-design process alongside perhaps the great and the good sitting around tables.
Yeah. Although if we can make big scaled systemic change happen, I think that's also important.
Yeah.
I was delighted, Sarah, when you said about rainy day savings and affordable credit, because too often I do find myself around tables with financial inclusion experts who really talk about access to products and services.
Yeah.
And often I feel, and Martin, your phrase earlier, it's the healthy and the wealthy who are going to always benefit, always be the pointy elbows at the front of that queue, are already advantaged in so many ways. So unless we actually focus on those people who are most marginalized and most excluded, then we're really not going to succeed in financial inclusion, in my opinion.
No, and I agree with you, Helen. And certainly in Money and Pension Service, we focus on, our remit is to focus on those most in need. And actually, we absolutely do need to connect with them directly ourselves and through lots of partners like Marla, because actually, if we don't help them, then we haven't helped financial inclusion.
Yeah, fantastic. Thank you so much for a really great discussion. Lots of energy, particularly around collaboration. I do want to come back to that stat about a third, 33% of people who are offline find it difficult to engage with NHS services that has really great analog channels. So we live in a digital world. We should embrace the digital world. We should carry on embracing and improving people's lives through digital, but making sure that we're always bringing people to those digital services and breaking down those barriers to digital exclusion. Digital exclusion is not the destination. Digital inclusion is not the destination. It's about people having better lives and being more included in today's society. But absolutely, the links with poverty, but making sure that people do have access to things like affordable credit and like rainy day savings would be absolutely critical. So let's make sure that we have a digital front door that is welcome wherever they get, says Jemma in the chat panel. But thank you all so much for coming. So as I said, we're going to be writing our report. It will be published at the end of January. We're going to have a Zoom launch for that, bringing up all the best bits from throughout the year. And I'm hoping that all of you panelists and everyone who's here joining us today will come along for that launch, that Zoom launch event towards the end of January. Thank you so much. That has been absolutely fascinating. And have a great day and have a great Christmas, everybody. Thanks so much.